Today we will be talking about the tax incentives for repatriates and inbound immigrants, which the Serbian government introduced with the intent basically to allow Serbian businesses to be more competitive when attracting talent to Serbia. If you would like to look at these provisions live, they can be found in Article 15V of the Personal Income Tax Law, as well as Article 15A of the Law on Mandatory Social Security Contributions. In addition to this, there is a very detailed rule book, a bylaw, which sets out the administrative details of these provisions and their application. And in essence, the legal provision that we are going to be talking about tonight states that the salary tax basis for a newly settled taxpayer for the salary that he or she generates on the basis of an employment relationship for an indefinite period of time with a qualified employer, wherein he or she has been employed in a position which requires specific professional education and for which there is a need which cannot be easily met on the local labor market, is the basis from Article 15.8, paragraph 2 of this law, personal income tax law, lowered by 70%. Now, right now, I will be going with you into the details of this provision and into the requirements for its application. So let's first of all look at, let's discuss where we got the idea, from who did we copy, who else has these similar norms, why were they introduced, and what's the goal that the government wants to achieve. So basically, what we know is that for some time now, in an increasing number of business sectors in Serbia, we are facing a shortage of qualified talent, of qualified employees. And this problem is only going to grow. And there are two main reasons for this. Number one, we have a huge problem of immigration from Serbia. And on the other hand, we have a demographic problem, a low birth rate, so not enough new people are coming in. And furthermore, unlike some other European countries, which also, for example, share our demographic issues, we are unable to attract easily foreign talent by way of immigration. So how to help Serbian businesses in this environment be competitive and attempt to try to find ways to help them attract people from abroad that they need. So the country that we copied the provisions from was the Netherlands. Now, you might say, well, that's just silly because there's not that much similarity between Serbia and the Netherlands. Serbia is a very poor country. The Netherlands is an exceptionally wealthy country. And so why look at the Dutch? Well, the reason why we looked at the Dutch was that actually the Netherlands, when you look at its environment, has a notable problem in attracting talent. Namely, it is surrounded as a relatively small country by far more powerful and far more attractive markets. So if you look at the Netherlands, a few hours by boat away is London, and its attractiveness as one of the biggest financial and in general biggest global centers. A little bit below a 2-hour train ride, you have Paris and France, and on the other side is the Europe's largest economy, Germany. And the Netherlands has to compete with all of them when the Dutch economy does when attracting talent. So this is why we thought that there might be similarities, and we were not alone in this, because the Dutch so-called 30% ruling system, which provides an opportunity that if you manage to attract talent from abroad, which has not previously been in the Netherlands, the Dutch legislation provides a system whereby you can ask for a ruling and obtain a ruling where you would get for a period of 5 to 7 years an exemption from 30%. Your 30% of your income would be exempt from personal income tax. The country that copied this regime was Italy, which has a notable problem of immigration and attracting talent, especially for that portion of Italy which is below the city of Rome. And Italy has detailed provisions which actually, where the size of the exemption actually relates to where the newly settled person actually decided to live. So if you go to the south of Sicily, your exemption might reach 90%. And in the same year, so last year when we introduced this provision, Portugal did the same. Portugal, in terms of immigration and the demographic decline, has a very similar problem as Serbia does. For example, 45% of the population of Luxembourg, their native language is Portuguese. So a huge problem of immigration. Plus, we wanted to introduce rules which would be tailored in a way to help Serbian businesses, but also have a demographic component. So where this demographic component comes in, you'll see a little bit later. So this is where we found inspiration for the rules. This is where we looked at when we were tailoring Serbian provisions. And this is the goal that we wanted to achieve by virtue of these measures. Now, let me give you the mechanics of the measure. Sorry. Let's assume that you conclude an employment contract with your employee, and in it you agree on a gross salary of approximately 2,000 euros per month. Now, if you contract this salary of 235,000 dinars per month gross, the net salary of the employee will be 166,000 dinars, while your total cost will amount to 275,000 dinars because a certain portion of mandatory social security contribution is not only withheld from the employee's gross salary, but is actually paid at the expense of the employer. Now, with the incentive, what you get is this. You've contracted a gross salary of 235,000 dinars, but for the purposes of calculating salary tax and mandatory social security contributions, you use not as a basis, not the actual contracted salary, but only 30% of this salary. So the mandatory social security contribution and salary tax calculations will be done on a basis which is 70,500 dinars instead of 235,000. This will enable you to provide your employee at the same gross salary of 235,000 dinars, a net salary of 207,000 dinars, which is, as you can see, an increase of more than 40,000 in comparison to the net salary without the incentive, while your total cost would drop from 275,000 dinars to 252,000 dinars. So basically, you are getting the best of two worlds. You are enabled to provide your employee with as high as possible net salary, while your total cost of this salary is actually lowered. So at this point, this is basically how the mechanics of the incentives are provided. And herein we have three examples. So let's assume that we provide a salary of a gross salary of 2,000 euros to our employee. So without the incentive, he or she would receive a net salary of 1,418 euros, while your total cost would be 2,333 euros. But with the incentive, the net rises to 1,826 euros, while your total cost drops to 2,100 euros. All in all, the incentive enables you on a monthly basis to have a saving of 641 euro on a gross salary of 2,000 euros. You are enabled to provide your employee with a net salary of a higher net salary by more than 400 euros, while your total cost of this gross salary drops by almost 250 euros. On a gross salary of 3,000 euros, without the incentive, your employee would be getting a net salary of 2,119 euros, while your total cost of this salary would amount to 3,500 euros. With the incentive, the employee's net rises by more than 600 euros to 2,736 euros, while your total cost of this salary drops to 3,150 euros. And in our third example, at the gross salary of 6,000 euros, without the incentive, the net salary would amount to 4,730 euros, while your total cost would be 6,575 euros. With the incentive, the net salary rises to 5,619 euros, while your total cost of this salary drops to 6,172 euros. So as you can see, the savings which are being made are not considerable. So if you have a gross salary contracted of 3,000 euros, the total savings on per annum basis reaches almost 13,000 euros, or almost 1,000 euros per month. In case of a 6,000 gross salary, the monthly savings are close to 1,300 euros. The one negative side of this incentive is that it does not apply to the complementary annual personal income tax, which is paid in Serbia, which means that the employee who is benefiting from this incentive will not be able to use the same basis on which he or she paid salary tax and mandatory social security contributions for the purposes of the complementary annual personal income tax, but will have to report the full gross salary and pay tax on it, pay this complementary tax on this full basis. But when you see the amount of the savings which are being generated at the level of the salary tax and mandatory social security contribution, this negative aspect is not that negative. Why I'm mentioning it is that in the initial proposals which were tabled by the Ministry of Finance, actually they thought to cover to make this incentive apply to the complementary annual personal income tax as well, which means that in some future steps this might be done actually. And here on this slide, because you will be getting the presentation, what you have is a detailed overview of the mechanics of the calculation of the incentive on an example of a gross salary of 6,000 euros. But you can just replace this number with any which you might. Social security contributions include pension insurance, state pension, mandatory insurance, as well as health insurance. I was coming to the effect of the incentive on that's the second negative of this incentive, is that during the time frame of the use of this incentive, which is 5 years, your future pension, state pension from the mandatory pension insurance system, is calculated not on the basis of your contracted salary, but on the basis which is equal to the basis on which you pay mandatory social security contributions. In other words, yes, the other negative of this incentive is that your future retirement pension paid out of the state funds will be a bit lower, because for the duration, for these 5 years, the basis on which this pension will be calculated will be lower than your actual salary. But if you take into account the fact that this incentive, and I will get back to that in detail later, that this incentive can be used effectively only if your salary is above 3 average salaries paid in Serbia, which means that your basis for calculating mandatory social security contributions will be uh, uh, in the minimum in the amount of an average salary. And the fact that in this minimum situation, your monthly savings, your net salary is increasing by more than 400 euros per month, this negative again becomes to a point questionable. Now, when we talked about, when I read you the legal provision, what you heard were several terms, several conditions. So you need to be a newly settled taxpayer. The employer has to be a qualified employer, and so forth. But there was a big condition with respect to the employee, in addition to him or her being newly settled, that the position for which he or she has been employed requires special professional education for which there is a need which cannot be easily met on the local labor market. Now, there are two ways in which we could have dealt with meeting this condition. One would be that basically we would say, okay, there was going to be a government body, an authority to which you would apply, submit your case, and then they would issue you with a decision confirming whether or not this condition is met. Unfortunately, experience shows that this would be timely, costly, and probably there would be a notable sense of insecurity where, depending on the practice of the authority itself. So where, again, we looked at what the Dutch did because they're a very practical people. And in the Netherlands, what they have is a very useful solution wherein if your salary, the contracted salary, is above a certain threshold, the amount of the salary testifies that these conditions are met. So in our law, if the gross salary, which is contracted with the employee for an indefinite period of time, is at least 243,450 dinars, the level of salary in itself shows that you have met this condition, that the person hasn't been employed in a position which requires specific professional education for which there is a need which cannot be easily met on the local labor market. So if your gross salary is at least this amount, 243,450 dinars per month, by virtue of this amount, you have fulfilled this condition. And there is no other requirement which you need to meet. If your salary is below this amount, then theoretically you could still apply for this incentive, but then you are faced with a very insecure and very timely procedure, which I would probably not advise to anyone, except under exceptional circumstances. The intent was actually to lure in people who would have high salaries, because those people we need. We need qualified people, and as a rule, qualified people are paid high wages. Now, for people who are younger than 40 and who have been abroad for the purposes of further education, their salary needs to be below 100 and below this amount, and needs to be at least around 166,000 dinars. First of all, now that we have answered the question, under which conditions do we need to contract our employment relationship? So it needs to be an employment relationship for an indefinite period of time. And the gross salary needs to be at least 243,450 dinars. The question arises, who is a qualified employer? So with whom do I need to conclude my employment relationship in order for me to benefit from this incentive, both me and my employer? because the law states that this incentive can be used only if the employment relationship is concluded with a qualified employer. Now, a qualified employer is any employer who is a resident of Serbia, who also cannot be considered as a related party to the newly settled employee's previous employer. In essence, the logic is thus: any employer who has been established in Serbia will meet the condition to be a qualified employer. And in addition to this, this employer cannot be considered as a related party to the newly settled employee's previous employer. Why this second condition? Well, it's because of the expatriates. Namely, in Serbia at the moment, we have roughly around 11,000 expatriates who have been seconded within the multinational corporations for whom they work. Essentially, they have been employed by within a certain affiliate of this multinational corporation abroad, and then they have been sent here to work in Serbia with another affiliate of this same multinational corporation. But when you look at these secondments, they have been happening, and they would have happened regardless of whether or not we provided any incentives. So since all incentives are basically a cost to the Serbian taxpayer, these situations have not been seen as warranting an incentive and a contribution, a sacrifice from the Serbian taxpayer, because these secondments would have happened. No talent is being attracted in this situation that would have not been in Serbia anyway. So if you have been an employee of, let's say, Coca-Cola in Greece, and you are now being seconded to Serbia to work for Coca-Cola in Serbia, because your Serbian employer is a related party to your previous employer, you cannot benefit from the incentive. But herein comes the demographic aspect. We now know that there are many, many Serbian citizens or former Serbian citizens who have immigrated from Serbia and who now work for big multinational corporations, and most of the world's economy is multinational corporations. So if a Serbian citizen or somebody who has a close personal attachment to Serbia is being seconded to Serbia, bearing in mind that this incentive lasts for a period of 5 years, then our suspicion is that this Serbian individual is more likely to remain here in Serbia than if, for example, a non-Serbian has been seconded and who will probably go abroad once the secondment period is over. So we wanted to motivate multinationals. If they are seconding people to Serbia, they should be seconding those who are more likely to stay once the period of the incentive expires, and which is essentially Serbian citizens or former Serbian citizens. But Serbia cannot directly discriminate, although as a country which is not a member of the European Union, we are allowed to indirectly discriminate. So we were not able to say anyone holding a Serbian passport, for those people a qualified employer is any Serbian employer, any Serbian resident employer. What we said is that for people who have been a Serbian tax resident for at least 3 years, counting from 1990, any resident of Serbia is a qualified employer. So if you were a Serbian resident for 3 years, counting from 1990, and you have been working for Coca-Cola Athens, and you are now seconded to work for Coca-Cola Serbia, the incentive applies to you. But if you cannot meet this condition, that you have been a Serbian tax resident for at least 3 years, counting from 1990, and you are being seconded within the same multinational corporation, within the affiliates of this multinational corporation, then the incentive does not apply to you. Now, who's a newly settled taxpayer? That's also a question. Who can benefit from this? To be deemed a newly settled taxpayer, you need to meet the condition that in a period of 24 months, Thus, 2 years preceding the conclusion of the employment contract with a qualified employer, that you have not been predominantly present in Serbia. In case of persons who are younger than 40 and who have been abroad for the purposes of further education, they need to be not present predominantly in Serbia for a period of 12 months preceding the conclusion of the employment contract. In the case of those younger than 40, the idea was to somehow essentially make these people to provide a better bargaining position in case, for example, of master students who have been abroad for just 1 year and who are now contemplating whether to stay or to leave, or to stay abroad or to come back home. Now, what does this mean? This means that basically, if you were coming to Serbia for a holiday period or to visit your family, essentially the incentive still applies, because as long as you have not been predominantly in Serbia for the last 24 months preceding the conclusion of the employment contract, then you meet the condition, the first stage of the condition to be deemed a newly settled taxpayer. But in order for you to be deemed a newly settled taxpayer, in addition to this condition, you need essentially to permanently settle in Serbia. Now, the law uses tax terminology and stipulates that you need to become a Serbian tax resident by fulfilling the condition that your center of business and personal interest is in Serbia, and that you are treated as a Serbian tax resident for the purpose of any double tax treaty applied by Serbia. Essentially, it all comes down to the same condition. Basically, if, for example, the employee who is now concluding an employment contract with a Serbian qualified employer and who meets the condition that in the past 2 years was not predominantly in the territory of the Republic of Serbia preceding the conclusion of this contract, this person needs to, simultaneously with the conclusion of the contract or within a reasonable period of time, and the reasonableness is stipulated at 6 months after the conclusion of the contract, that person needs to settle his whole family here in Serbia if he has or she have a family. So if you have a spouse and kids, they need to follow you. The kids and the spouse cannot stay abroad. In case, for example, you have a family with kids, you need to have a permanent place to live in Serbia at your disposal, and other conditions of your personal relationships and of your personal situation have to testify to the fact that this is your permanent home and that this country is where you have permanently settled in a way which makes it your center of vital interest for the duration of the use of the incentive. This is where the demographic aspect of this incentive comes in, because again, the sacrifice of the Serbian taxpayer makes sense only if we get something out of it, and we wanted to get not only the possibility to attract talent, but also to attract people, new settlers to the country who will luckily stay even after the expiration of the incentive, because the period of 5 years was deemed sufficient to make your relationship as permanent as possible. Now, when you look at the bylaws, the bylaws have been written in a way which is they wanted to reflect reality. So first of all, and this is where we can testify to this fact, is that similarly to other countries, for example, if there is an Italian here, they know that, for example, in Italy, you need to register with a specific official registrar of Italians living abroad. And the same thing is in Serbia. If you immigrate, you should register with the authorities the change of your domicile, or register the fact that you have moved out from the country. But if we made this condition relevant for the application of this incentive, then very few people would be able to benefit from it, because Well, very few people actually meet this obligation. Very few people in Serbia have ever registered with the change of their domicile, and probably in their official documents they still have a Serbian address, despite the fact that they no longer live here. So the bylaws state that, for example, proving the condition that you have not been predominantly present in Serbia for the last 2 years can be evidenced by four alternative means. So any of these works: a confirmation on the change of domicile abode from the Serbian official registrar, if you have one. But if you don't have one, then you can provide a confirmation on domicile abode in the country where you lived, an excerpt from the advocate registrar, which you would probably be able to provide unless you were in that other country illegally. But even if you don't have this, then you can provide us with a confirmation from your foreign employer that you have been employed abroad and working abroad during this period. But if you have been an entrepreneur or a freelancer, then and you can't provide us with a certificate from your employer, then proof of social security from the competent authority of the foreign country you've been living is sufficient evidence that you have been outside of the country predominantly for the period of 24 months. Of course, the confirmation must cover this period. Also, what you need to do is basically the application of this incentive begins from the first paycheck that where you know that the conditions are met or that they will be met. So you don't need to obtain any ruling from the authorities, but you actually keep the documentation according to the bylaws, which prove that you have met the conditions for this incentive, and you provide them to the authorities if they begin an audit. But there is no approval procedure, and you start applying the incentive immediately. Now, one second. Herein, there are the documentation requirements in detail, and I will not burden you with their details because they're pretty straightforward. Now, there was a question, and this is something which is interesting. One second. With respect to the foreigners who have a problem with respect to meeting the condition for concluding an employment relationship for an indefinite period of time, because foreigners will very rarely, so it's difficult to get a permanent residence here in Serbia if you're a foreigner, and most foreigners will be issued a temporary residence permit first, and then later on perhaps a permanent one, but only much later. So the issue is, how can a foreigner apply for this incentive? Now, the first thing is that this incentive has been drafted with the intent to last for a long time. So what we knew when we were writing the incentive was that the Serbian immigration legislation, so not tax legislation, but immigration legislation, was becoming more and more liberal because of the evident need for additional workforce. So essentially, this incentive has been drafted in a way to basically prove that, to basically follow the liberalization process of the immigration legislation. Now, furthermore, even at this point, a foreigner can actually use this incentive and actually can conclude an employment contract for an indefinite period of time, despite the fact that he or she has been issued only a temporary residence permit, because we've checked with the authorities, and we have also checked with Serbian employers as well as service providers in this area. And if you conclude an employment contract with a foreigner for an indefinite period of time, but in the contract stipulate a caveat which states that the employment contract will be terminated upon expiration of the official residence permit. So the employment will be for an indefinite period of time, but will stop once one of the conditions for its termination is that the foreigner loses his or her legal residence permit. The authorities have actually accepted such contracts for an indefinite period of time, and we have actually checked this. And as the Serbian practice and immigration legislation becomes more and more liberal, which it has to because it is forced to do so by the reality of life, this incentive does not have to be changed, but will just follow these developments. Okay, now one thing which is relevant, and the last one which I wanted to talk to you about, basically regarding this incentive, is that it is two things actually. One is that HR departments should be involved in using it, because good documentation is very important, because you are not getting any previous approval. You start applying the incentive immediately, and then you might be checked up upon by tax authorities in an audit. So your documentation should be in order. And the second reason is that the incentive has been drafted in a way to follow the employee. So what does that mean? Essentially, let's say that I come back to Serbia, or I'm a newly settled taxpayer who meets the conditions for this incentive, and I am employed by employer A. Okay. Now the duration of the incentive is 5 years. So let's assume that I work for my first employer, my initial employer, for a period of 2 years, and then there comes in a second potential employer who offers me a better deal. And I decide to quit my initial job and to start working for this second employer. Because with this second employer, provided that I supply this employer with all the adequate documentation, I can continue to use the incentive for the remaining 3 years of the incentive that I've not used with my initial employer. So essentially, you can change employers and still use the incentive for a period of 5 years. The only important thing is that A, you have initially properly met all the conditions for the use of this incentive, and B, that all your subsequent employers provide you with a high enough salary to meet the condition that we talked about with respect to the quality of your employment position. The presentation itself, which you will get, is actually tailored to compare this incentive with an incentive which has expired. Essentially, what our law stipulates in article, if you would like to look at this provision by yourself, the special incentive for the creators of innovative startups is provided in Article 21E of the personal income tax law and in Article 45D of the mandatory social security law. And essentially, what this measure does is it provides an exemption from salary tax and mandatory social security contributions for those people who have been employed within the startups they've actually founded. So if you establish an innovative startup in Serbia and you become an employee of your own startup, then there is an incentive which will provide you with an opportunity to perhaps avoid paying any salary tax and any mandatory social security contributions on your salary. In order for the incentive for the founders of startups employed with their own startups to work, your company needs to meet the definition of being a newly incorporated company engaged in innovative business activity. So in order for the incentive to work, the company, the employer, needs to be a newly incorporated company engaged in innovative business activity. In order for you to be treated as such, you must not be older as a legal entity for more than 3 years. So if you're older than 3 years, you don't meet the condition to be a newly incorporated startup. And you need to be engaged predominantly in innovative activities in terms of the law which governs innovative activities. And that means that you need to predominantly perform activities conducted for the purpose of creating new products, technologies, processes, and services, or significant amendments of existing, all in accordance with market requirements. In addition, your annual turnover must not be higher than 500 million dinars. So 500 million dinars is the threshold which you must not pass of your annual turnover. You cannot distribute dividends during this period of 3 years. Your center of business activities must be located in Serbia, which means that essentially all your development needs to be conducted here in the country. All your R&D must be, or most of it needs to be conducted here. Your markets can be wherever you want, but the R&D, the innovative business activity must be carried on here. You cannot be set through an M&A, so you cannot be the product of a business reorganization, because that would be just tax planning. And in each of these 3 years, you need to meet one of the following conditions. Either your R&D costs are not less than 15% of your total costs, or more than 80% of all your employees are highly qualified, or the company owns or uses a registered intellectual property or patent which is closely related to the innovative business activity that it performs. So these conditions need to be met for the employer to be treated as a newly incorporated company engaged in innovative business activities. If the company meets this condition, then all of its founders, under certain conditions, and we'll get to them, who are employed with this newly established innovative startup, may use the exemption for their salaries during a period of 36 months, so 3 years from the date of incorporation. However, the limit of the exemption is set at 150,000 dinars gross per month. If your salary exceeds this amount, then you will be paying Serbian salary tax and mandatory social security contributions, but for this period of 36 months from the date of incorporation, only on the amount which is above the 150,000 dinar threshold per month again. In order for you to benefit from this incentive, as a founder, you need to hold at least 5% of the shares in this newly incorporated innovative startup for the duration of the exemption period, which means that in theory, a maximum of 20 people within one company can benefit from this incentive. You need to have a full-fledged employment relationship with the startup. The startup cannot have any related parties. That's an important thing. So it cannot be a part of a group of affiliates, and it cannot earn more than 30% of its total revenue from other persons who are considered to be related to any of the founders. In order to benefit from this incentive under current law, you need to be established by the end of this calendar year, 2021. Whether or not you're related to another company is governed by the corporate income tax law and its transfer pricing provisions. And basically, you're related to another legal entity if there's a relationship directly or indirectly of 25% capital ownership or 25% of the votes in the taxpayers' governing bodies. Plus, there are special rules relating to family relationships with respect to the founder's family and its his or her relatives. Also, please note that under Serbian law, any company established in a jurisdiction with a preferential tax treatment. So any company established in a tax haven jurisdiction, and a tax haven jurisdiction is we have a list of those. There's around 50 jurisdictions that are treated as tax havens under Serbian law. Any company established in a tax haven jurisdiction is automatically treated as a related party to any Serbian company, regardless of actually the relationship itself. This incentive can be exercised by only one employer, so you can't use it in several companies. If you use it, then you cannot use other subsidies for employment. And again, it can be used only on the basis of one company corporation. So you can't use it in two companies. It's easy to, the one negative side of this incentive, the one negative side is that during the duration of the incentive, it is the Serbian government which takes over the payment of the mandatory social security contributions for those who are using the incentive, but it is doing so only on the statutory minimal social security contributions base, which means that for the duration of the incentive, which is a maximum of 3 years, your all-day retirement pension or your sick leave allowance will be calculated on this minimal basis and not on the actual salary that you are receiving. It will be calculated on the basis of what on the basis of what the government has been using to pay your mandatory social security contributions. You apply the incentive by yourself, starting from the first moment that you have fulfilled the conditions for the incentive, and due to the fact that the current information technology and the integration of the business registrar agency, the central register for mandatory social security insurance, as well as the national employment agency, enable the Serbian authorities to audit and control the application of this incentive with ease.